As Beijing and Washington try to hammer out a trade deal, electric auto giant Tesla is forging ahead in China. The company's CEO Elon Musk broke ground on the Gigafactory in Shanghai on Monday, kicking start an ambitious plan to produce 500,000 vehicles in China every year. The new plant, which is Tesla's first outside the U.S., is located in the Lingang Area, a high-end manufacturing park in the southeast harbor of Shanghai. According to the Shanghai government's statement on Monday, with an investment of over 50 billion yuan or $7 billion, Tesla's new plant will be the largest foreign invested manufacturing project in Shanghai's history. Musk said in a series of tweets before the event, the company is aiming to complete the initial construction work this summer and start producing its Model 3 by the end of the year. So will Tesla reshape China's new energy cars or even the entire auto market? And how will Tesla's strategy fit in with President Trump's Making America Great Again? Joining me from Shanghai is Professor Teng Binsheng, Associate Dean and Professor of Strategy at the Cheung Graduate School of Business, and here in Beijing, Einar Tangen, Current Affairs commentator. Before we start the discussion, here is what Elon Musk said on the opening of the factory.
It's very important that the world transition to sustainable transport and sustainable energy generation, so solar, battery storage and electric vehicles, and China has been a world leader in that transition. We look forward to helping accelerate that transition along with other electric car companies in China.
So, gentlemen, welcome to the show. Einar, let me go to you first. Tesla's initial target is to make 250,000 cars a year, eventually reaching 500,000. That's 5 times the number of vehicles the company currently produces in the United States. Why do you think such a target is set? Is that a bold decision, maybe a bit too bold?
Yeah. Well, Elon Musk is somebody who has a tremendous amount of ambition. He's a very brilliant engineer. There's no question about that. As a CEO, he's had a few missteps. Sometimes his ego has gotten ahead of his better judgment, or what should be his better judgment. So he's aiming high. Let's see what happens. Remember, he's up against very, very entrenched interests here, one of which is the Chinese electric car industry. I mean, this is the largest market in the world, and they have the most production, and the Chinese government's behind them. And on the other side, you have the imports on the luxury side, the Mercedes-Benz, the BMW, you name it, and they are not going to be making room for Tesla.
No. Professor Teng, what are the advantages of producing in China for Tesla against all the odds, the competition that could be getting even keener over the years? What do you think prompted Mr. Musk to make such a decision, and very quickly, basically?
Obviously, tariff will be the biggest advantage. As we know, the trade war between the United States and China, introduced so much uncertainty into the relationship. So I think that the best way to go around this situation is to have actual production in China. And also, by producing all the products in China, Tesla is going to get tremendous support from Chinese governments at different levels. For example, huge loans from the municipal the government, the local banks, and so on. That's going to significantly actually lower the overall production costs of Tesla. Not to mention that with the kind of scale that you just mentioned, it's going to introduce much economy of scale. All these will be significant advantages.
Yeah, basically Chinese Premier Li Keqiang has just met with Mr. Musk, so that shows the kind of political support the Chinese government is attaching to this project. I wonder, however, Einar, could Tesla have stayed in the US and continue exporting to China, as what President Trump would have very much liked for Mr. Musk to do? As a result of moving in China, do you think he would sacrifice any American jobs to competitors in China?
Well, obviously, by moving his factory out of the U.S., he has taken jobs out of the U.S., and that is contrary to what Donald Trump wanted. But this is exactly what Donald Trump set in motion. If he hadn't started this tariff war, I mean, perhaps Tesla would not be planning to be in China if it was not an impediment to going overseas, and if they had been able to work on the Chinese government's desire to see more electric cars in China as well as technology. So, in essence, by pushing these tariffs Donald Trump has set in motion, anybody in the U.S. who wants to do business in China has to either be in China or look for a third country to do it. And unfortunately, the same is true with Chinese companies trying to do business in the U.S. So sometimes the road that you try to avoid, you end up taking.
When Tesla's plant in Shanghai starts full-scale production, which is expected in 2020, Professor Teng, what kind of competition do you think it will pose for Chinese new energy car makers? Will Tesla become a thorn in the flesh to Chinese automakers and push domestic car makers to speed up their technological upgrading?
Right. I think it will be a double-edged sword for the Chinese industry of energy cars. As we all know, the segment has developed very well in China, making the country one of the most advanced and the largest market for energy cars. But nonetheless, we're yet to compete at the same level with Tesla in terms of the design, in terms of the overall functionality, the sense of being a luxurious product. So, for example, NIO Weilai is selling at a price of 500,000 RMB per piece, which is almost at the same price of Model 3 of Tesla. So when you compare these two products, I'm sure some consumers may go for Tesla. So I think that first wave of competition will be very strong, not to mention that the price will continue to drop once they increase their economy of scale. So I think for the first couple of years, Tesla will pose significant threat for the incumbents in China. But in the long run, since we're all in the same ecosystem of energy cars, I think Chinese companies do have a lot to learn, not to mention that they do have some certain advantage in terms of localization, knowing the local consumers better than Tesla.
Mm-hmm. The production, as you said, at the Shanghai plant will help Tesla significantly lower its cost and prices. The Model 3, for example, at this moment starts at a price of $35,000 in the US and is sold for twice that amount in China. After the China production starts, it's expected to be much lower than that. So, Einar, what kind of squeeze that's going to put on Chinese car makers which traditionally would bank on the price advantage compared to their international counterparts?
Well, when you start about NIO, what you're really talking about is the mid-level luxury edition, and the fact is that a lot of people are going towards electric cars on the very low end, and this is where China has almost a monopoly. There's really no real competition out there. There are a lot of brands that are looking to move in, but they're looking to move into the luxury segment. This is what I was talking about before. BMW, Mercedes, all of these companies are out there, VW. So I don't know that they're necessarily going to be that big an impact. I'm going to disagree a little bit with my colleague. Yes, in certain segments they might compete very well, but over the long run, given that the Chinese government is pushing this market and supporting these different car companies indirectly, I mean, in certain cities in China, they have already switched to all-electric taxis. Now, if you start thinking about how many taxis that involve, and in some cases they buy two so that they can run them continuously with the same driver, and the cost of that, it's literally, you could buy 5 of these taxis for what it would cost you to buy 1 of these Model 3s. So I don't know that they're going to do it, and I think that Chinese companies will continue to improve, especially with the economies of scale that they're getting. I mean, look at the cell phone industry. It started out all foreign competition, and look at it today. 12 out of the top 15 are Chinese.
Professor Teng, you want to respond to that? Is there any comparability between the cell phone case and the new energy cars we're looking at this moment?
Certainly. Chinese manufacturers are very quick learners. So given them just a couple of years, chances are they're going to pick up various tangible and intangible technologies and the know-hows from their competitors, especially in China. So take the internet industry as an example. Not a single international giant has beaten their Chinese competitor in China. So given how entrenched the Chinese car makers have been in the electric car business, I do think that they will have their defense line prepared. So in the short run, I think that the first wave of attack will be quite significant, but Chinese car makers should be able to hold off.
Meanwhile, the Chinese government has relaxed a cap on 50% of ownership that a foreign company can have in terms of cooperating with a local counterpart. And as a result of that, several, for instance, German car maker BMW and Mercedes-Benz cars have also either increased their share in a local joint venture or have investors and have their own factory in China. What does that say about the prospects of foreign businesses in China in terms of investment and business operation environment? Professor Teng.
That means they are still very optimistic about the Chinese car market. Although we just experienced the first ever year of a downturn in the Chinese car industry in 30 years. But I think in the long run, taking the next 10 years, for example, I think we're still in a very good trend here. Especially globally speaking, we're still probably the fast-growing car market. And also, given how much support the Chinese government provides for the electric car segment, how much subsidy going into this segment, I think it's not a wonder why these global giants are so optimistic. But also, we negotiated a deal of joining WTO in 2001. That's 18 years ago. So after such a long period of time, we finally relaxed this regulation of 50-50 joint venture in the car industry. So that's why these car makers are so enthusiastic of taking advantage of this new regulation or new environment, which they didn't enjoy in the last 18 years.
Yeah, so there's still some policy potential there. Many thanks to my two guests. I have to leave it there. Professor Teng Binsheng, Associate Dean and Professor of Strategy at the Cheung Graduate School of Business in Shanghai, and Einar Tangen, Current Affairs commentator. And that's it for this edition of The Point with me, Liu Xin. As always, you can follow me on Facebook and Twitter using the handle The Point with LX. Download the application called CGTN to watch the show on your mobile devices, or go to YouTube and look for CGTN The Point. Thanks for watching. You've got The Point.